There's been a lot of buzz surrounding this credit card lately in the credit card community, and some of it has been good and some of it has been not so good. And I must admit that I've heard about the not so good before I heard about the good. So today we are going to talk about this new credit card that is doing something new in the space, something unconventional and non-traditional. And this new approach to a credit card has definitely ruffled a few feathers, and understandably so. So let's get down to the truth about the Aven card, and to be completely transparent, this video is sponsored by Aven. However, Aven has allowed me to be honest in my review. So what is the Aven card all about? The Aven card has a few key missions that I'll summarize into the following 3 points. It provides you with an alternative way to borrow a sizable amount of money, and to do so relatively easily. It can provide you with the largest credit limit that you can get from any credit card. And 3, it can get you the lowest interest rate when compared to any credit card on the market currently. Now, all of this is good, and you may be getting a little excited about this, but I have to give you the little bit of not so good news, and that is this credit card is not for everyone. And one reason for that is because this credit card is essentially an alternative to a HELOC. Now, I know I just dropped a term that some of you may not be aware of, so before we go any further, let's discuss what is a HELOC and how it directly relates to the Aven card. A HELOC, or in other words, a home equity line of credit, is a type of credit that is extended to you, typically by a bank, that is secured by the equity within your home, that provides you with a credit line to be able to draw on that equity as you need, similar to a traditional credit card, except that the credit line is backed by the equity you have in your home, and you will mostly access them money through a check, cash withdrawal from a physical bank, or online bank transfer. Some banks also offer HELOC account cards, which is similar to an ATM card, and you can use it like a debit card to make purchases or make cash withdrawals from an ATM. So because the Aven card is based on a HELOC, that means that this credit card is targeted toward homeowners, and not just any homeowner, specifically homeowners who have positive equity within their home, which refers to the difference in the market value of your home and the outstanding balance of everything you currently owe on your home. HELOCs are beneficial because you can access the equity within your home that would otherwise sit dormant until you sell your home, and it gives you the ability to access a large line of credit at a much lower interest rate than a traditional credit card. So what does all of this have to do with the Aven card? That's because the Aven card gives you access to the equity within your home through using the Aven credit card, and your home is used as the collateral to back the line of credit on the Aven card, which means that it is a secured credit card product, which differs from the traditional credit card that is unsecured, because we aren't asked typically to provide any sort of asset to back that line of credit on most traditional credit cards, and is also a little different from the typical secured credit card that's typically backed with a relatively small security cash deposit of $500 or $1,000, which in turn becomes the line of credit that's extended to you on those secured credit cards. And the lowest credit limit that you will get on the Aven credit card is $5,000. Now, the Aven card is a much bigger deal than your standard secured credit card because of the following. Number 1, you can get a much larger line of credit than the typical secured credit card because, as I mentioned earlier, those credit cards are backed by smaller cash deposits. Number 2, those credit cards are marketed toward beginners to credit who need to prove that they can handle credit responsibly, and the Aven card is not marketed towards that particular demographic. In fact, Aven wants to attract homeowners who are financially responsible and have pretty strong credit. And number 3, the Aven card is the first credit card that has ever been backed by your home's equity, and that is a pretty huge deal. And I think this is a great segue to addressing the elephant in the room, or in other words, the downsides about HELOCs. And the biggest one of all is that failing to repay a HELOC can result in the loss of your home, because your home is used as a collateral to secure that line of credit. And on top of that, a default is not going to look good on your credit report either. So I behoove you to take all of this seriously, and Aven really wants you to understand this risk as well, because at the end of the day, they are not in the business of taking homes from hardworking individuals and families, and would prefer that you wait for the right time to get their product. So here's some of what the Aven card has to offer. Aven's interest rate starts at 7.99% APR. I've opened a total of 4 new credit cards within the year, both business and personal credit cards, and the interest rates on each of those credit cards range between 22.99% all the way up to 29.24%. So at the very least, out of my new credit cards, my current APR is nearly 3 times as much as the lowest APR available on the Aven card, and Aven states that their starting APR average is about half of the APR offered on traditional credit cards. As of the filming of this video, the APR on the Aven card can get to a high of 15.49%. I checked some of the major credit card issuers and the lowest starting interest rate I found was 17.24%. So if you're concerned about the interest rates on a credit card, then the Aven Card shines in this category because their highest interest rate is lower than the starting point of most of the credit cards offered by the popular credit card issuers. Aven says that you can get pre-qualified in as fast as 2 minutes with a soft pull on your credit, which means that pre-qualifying won't impact your credit score and you can complete the full application process with approval in as fast as 15 minutes. A hard credit pull will only happen once you accept an offer. Traditional HELOCs typically take an average of 2 to 6 weeks to complete, and there are cases where some can complete the process within a few days. Aven found a solution to this delay through using their technology, especially their nifty signature signing robot that's able to notarize documents virtually, allowing the entire process to occur without having to step foot into a physical bank, which could be a really big plus to some of you. There won't be an account opening fee, origination fee, annual fee, notary fee, or appraisal fee. Aven states that their mission is to provide the lowest cost and most convenient access to capital. HELOCs typically come with closing costs that in a general sense includes any fee incurred when originating, underwriting, closing, and recording a loan. These fees can include the fees I mentioned earlier that Aven has specifically stated on their website is not associated with the Aven Card, and there are also other fees that can be included with other HELOCs such as a credit report fee and a settlement fee. It is important to note here that there are banks and credit unions that do advertise no-fee HELOCs, and some of these banks require you to bank with them and even have the monthly payments automatically deducted from your checking or savings account. So definitely do your own research to make the best decision for you. The Aven Card can come with a very high credit limit. Now remember that this credit limit is based upon the equity within your home and other factors, so don't think that you will be guaranteed a credit limit of $250,000. That is the maximum limit that is currently available on the Aven Card, and it can be pretty sweet to show that you have access to that much credit, but with that much credit comes responsibility, and on this channel I never advocate for anyone to carry a balance on a credit card. However, sometimes emergencies happen and it will be up to you to decide what is the best way to handle that expense. Maybe you have to replace the roof on your home and it'll cost $15,000 to do so. This is something that is a real emergency because you may be at risk of losing your home insurance due to the need to replace the roof. This happened to a lot of people I know within my state and definitely isn't the case everywhere, but in this scenario, if you were to charge $15,000 to a traditional credit card, that can potentially use a significant portion of your available credit limit on that particular credit card, and this can have an impact on your credit score. So in this scenario, the Aven Card with a credit limit of, let's just say $100,000 could be a viable solution for that $15,000 charge and would report a utilization of just 15% to the credit bureaus. My largest credit limit on a credit card right now is $32,000, and charging $15,000 would use approximately 46% of that credit limit, which is frowned upon by the credit bureaus because they typically like to see a utilization of 30% or less. Finally, this is probably my favorite feature of the credit card, and that is it comes with 2% unlimited cashback. In order to get the 2% cashback, you have to enroll into autopay, and although this is a solid cashback rate that's competitive with other catch-all credit cards on the market, I don't recommend using this credit card for every single purchase. Again, this card is secured by your home, so you want to be careful and strategic with how you use it. However, getting 2% cashback on those emergency expenses, such as the $15,000 roof replacement example I mentioned earlier, could net you a return of $300 in statement credits, and that can be pretty sweet, especially if you have to spend a lot of money. Now let's discuss some of the drawbacks and concerns with the Aven Card. First of all, let's talk about some of the fees. The Aven Card has a 2.5% balance transfer fee and a 2.5% cash out fee. Both of these fees are incurred once anytime you use that particular transaction type. So if you want to transfer a balance, there will be a 2.5% fee for that balance transfer and vice versa. Let's keep in mind that this is a credit card in the front, and those fees are competitive with traditional credit cards. I encourage you to take a look at the terms and conditions of the popular credit cards out there to see the fees charged for both of these transaction types. There's a valid argument that with a traditional HELOC, you won't incur these fees during the draw period. However, remember that opening the Aven Card won't cost you any fees, whereas HELOCs can come with upfront costs. If the goal is to use the Aven Card strictly as a credit card, then these fees might not be of a concern to you. However, if you do plan to use this card for multiple balance transfers or multiple cash outs, then be aware of those fees and do the math to find out how much they can add up. As I shared earlier on in the video, video, the Aven card is only for homeowners. Since the card is based on the equity within your home, that means that you need to own a home in order to have any equity. If you're not a homeowner, then unfortunately, you cannot be an Aven card holder. The biggest concern with the Aven card is whether or not a card holder can lose their home, and the short answer to this question is yes. You can lose your home if you're not financially responsible and bite a bit more than you can chew. The interesting part is Aven does not want to appeal to the customer who won't be responsible with this credit card because they really don't want to take your home, and this was one of my major hangups with this credit card. Aven requires their customers to have a credit score of at least 640 to be approved for the credit card, and Aven will also verify your income to determine what credit limit is appropriate for you. Ultimately, Aven would like to mitigate this scenario as much as possible, as they've stated that they don't want their customers to borrow irresponsibly, and their goal is to hit a 0 default rate. Their business model is based on the credit card product and not dependent upon defaults. But understand that, like with anything, there are risks, and you will be making the decision to back your credit card with your home. If this makes you nervous, then it's probably safe to say that you aren't the target audience for Aven, and it's probably best to seek another borrowing option. Do your research and make sure that you fully understand this. This is your home, and you have to make sure that you do everything to protect your home. Finally, let's discuss whether getting this credit card is a reckless decision. This can be a reckless decision for those who are not disciplined, and keep in mind, this credit card is not for people who struggle with being disciplined. Having access to a potential credit line of $250,000 can be very tempting, and if this card ends up in the wrong hands, then it can become a means for people to make reckless spending decisions. As with any credit card, this credit card is not an excuse to buy things that you don't need and that you don't have the finances or means to repay the borrowed amount of money. This is why Aven will verify your income to mitigate this, which is a step above the traditional credit card. Traditional credit cards typically allow you to self-report your income, and in certain instances, they may require you to provide proof of that income, but this doesn't seem to happen too often. Again, when taking a look at Aven's website, it looks like they really want you to think of using this credit card for projects around your home, such as updating your kitchen, home repairs, upgrading your bathroom, etc., which when budgeted and carefully planned can be beneficial to the homeowner. I think Aven is doing something that is unique, and it can be a good tool for the right person. If you're a person who invests in real estate, you may be familiar with hard money loans. These loans typically come with high interest rates, but time is money when it comes to investing. What Aven has done here is take a process that typically takes several weeks on average and dwindle it down to a process that can be as fast as 15 minutes to complete. So this card could be on the radar for small investors and could be a good tool within their arsenal to use to complete some renovation projects. This card can also be useful for homeowners who need to fund emergency repairs but can't wait weeks to go through the process with getting a HELOC approval from a bank. In a way, the quick and simple process can offer a bit of relief when homeowners are faced with stressful repairs. Lastly, this credit card is not for those who are not disciplined and aren't able to manage risks well. Making a decision to secure debt with the roof over your head is a serious decision, and it should not be taken lightly and should be avoided by anyone who cannot handle this responsibility. Now, tell me what you think about the Aven credit card in the comment section below. I always like to read your thoughts and opinions. If you're struggling with knowing when to pay your credit card bill to increase your credit score, then watch this video next. But as always, thanks for making it to the end of the video. So come on over and get your high five.